Hello, hello, hello. Welcome to our stock trades. I hope you're doing well. Today's my day off. I get Friday off today, which is exciting, right? But I work Sunday. Okay, the hospital internal medicine rotation has been very fun. It's a little bit of everything, so it's a great way to learn the fundamentals of medicine. But in this video, we're gonna go ahead and show you some fundamental analysis. Okay, so this is going to be a very useful video. We haven't talked about this, and I'm going to slowly bring in a couple of gems of evaluation processes that you can use to essentially find the book value of a company. And by finding the book value of a company, it will essentially help you calculate the margin of safety. Okay. So we're going to talk about all that means. Okay. So first things first, if we can go, we're going to get straight to business. Welcome. If you haven't already done so, please subscribe and comment down below if you have any questions. Okay, so let's go ahead and talk about Clover Health here, and we're going to shift gears and look at this Microsoft Excel that we got from our proprietary brain machine. So how do we do this for our members and mastering stock market students? All you got to do is open up the help menu, and then you go in and go to stock fundamentals and you click next. And then it's literally you just click this and then you put in your ticker symbol, and let's just go ahead and do it. And it's going to essentially give you a download link. We're going to be able to download the quarterly results for Clover. And then within this, you'll get the income statement. Here, let me go ahead and should I lower it? Yeah, it's fine. You get the income statement, the balance sheet, and statement of cash flow. Hello, 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 hello. Hi, hello, hello. So by doing this, this is going to help you calculate the book value. Now, before we get into the book value, what we get into the math, what is book value? So the book value is the actual value of the company if they go to court and if they become bankrupt. Did he say bankrupt? Right? So why do we calculate this? And is this a reliable calculation? And why haven't I talked about this for like a long time since we've been together? Well, personally, I don't believe it's a reliable calculation because if you look at Apple, its book value is a lot lower than its actual worth. But then you would ask yourself and say, well, does it really matter? Warren Buffett's in it. And the thing with book value is that for technology companies, the book value is a lot lower. And if you go to, let's say, utility companies, ExxonMobil, because there's some physical assets, their book value is a lot higher. Okay. So I'm just going to preface that in there. But essentially, let's imagine Clover just filed for bankruptcy. Okay. I know there's going to be some people in here. What? They filed for, no, they did not file for bankruptcy. We're doing an example. So let's assume, and you should do this for all your companies, honestly. It's funny that I'm doing this now because the output is ridiculous, and there's going to be a point. You're going to walk away from this video understanding how undervalued this is, okay? So we're going to go ahead and look at the book value, and that's assuming that they about to hit bankruptcy, and we want to know how much money each shareholder is going to get. So if they become bankrupt and they lose everything, how much do shareholders get? Okay. I know. I love you guys. So can anyone guess? Just kind of guess a number on let's make this fun. Come on, it's numbers, let's make this fun. Guess down below. I ate a sandwich right now. Little heartburn, getting old there. Guess what you think shareholders would get if Clover becomes bankrupt. Okay, so let's go ahead and calculate it here, and I'm going to show you where to get this. So $3 billion. Oh, hell yeah, right? That's nice, right? Everybody, right? So here's the thing. What you want to do is you want to go over to the balance sheet, and you want to scroll down here to where it says total stockholders equity. Okay, and you want to pull these numbers. Okay, now the thing is, I only care about the most recent one, which is on June 30th of Q2. Okay. That's what I care about. Okay. Here's total stockholders' equity. Now you may be asking yourself, Al, what is stockholders' equity? No worries. I put the equation here. It's total assets subtracted from total liabilities. I don't understand why I didn't have the minus here. There it is. Total assets subtracted from total liabilities. Assets is what they have. Liabilities are what they own. And then you get this number, which is the total stockholders' equity. That's how much we own. That's our equity in this company, right? In terms of what is the total of it, right? Then you go in and divide by the number of outstanding shares. So you take this number divided by this number, and then you calculate the book value. Okay. So let's do this in real life. You take the book value, which is the total stockholders equity, which we calculated. Actually, Brain Machine calculated it for you. It's just total assets subtracted from total liabilities. And you divide that over the shares outstanding. It's just going to give you 89 cents. So that is how much Clover Health is worth. Okay. Then you want to look at the price of the stock. So let's go back and let's just do a quick little Google search. And it's worth $1.55. Okay. So then you go here, $1.55. And then now, where would we calculate now the margin of safety? So the margin of safety, before we calculate it, let's move on to this little graph here I have for you. Okay. The margin of safety, let's say, you remember when we did our intrinsic value calculation? So let's go here and let me go into our Mastering Stock Market course. And let's go to the intrinsic value calculation here. Okay. And what we're going to be doing is we're going to find the intrinsic value of Clover. And we're going to do this really quickly. We're just going to kind of like spitball it, right? So is it 477? So 477 million. So we'll put 477 here. We'll push this out to 10 years. We're going to assume a 35% growth rate. We're lowering the growth rate just in case until 2023 happens. You know what I mean? And they made what, 475 in 2021. They're about to make 3 billion in 2022. We take 5%. Well, hello. We take this multiplied 5%, so about 73, and then honestly, you can just double that number here. But again, so you just take the average here, 73.75, 150, and you get a stock price of anywhere between $15 to $31. We have a price target of $25. Okay, so that's the value of the company. That is the intrinsic value of what this company is worth. Once we're assuming the free cash flow positivity, this is where they're going to be at. Okay, 5% of the revenue. So now that we found the intrinsic value of the company, right now we're calculating here the book value of the company. Okay, the book value is down here. Now, normally we don't really calculate this because historically it never comes near it. Okay, and I'll explain what that means. Okay. Oh yeah. Now I'm going to be showing you guys some stuff. I've been so busy building our platform, Brain Machine, and so we can use this data to teach, and so you guys can make money, right? So all right. So here it is. Now what we're doing is this is the intrinsic value, but today we're not going to calculate the intrinsic value price. In fact, we could do IVC price. And our IVC is $25. So let's go ahead and let's make this a little bigger. And let's put the value here. Now that's what we calculated. What I'm going to do is I'm going to calculate the book value from the actual stock market price in today's, what the market, Mr. Market thinks. Okay. So what I'm going to do is I'm going to take the book value divided by the price of the stock. And when I get that, I'm going to turn this into a percent. I get a 58% margin of safety. So this is a really, really deep margin of safety that we're getting. So now let's assume the price goes up to $7. What is going to be my margin of safety? Is it going to be higher or lower? It should be lower. My margin of safety just dropped lower to 13%. If it becomes $25, my margin of safety dropped to 4%. Okay. Right now we're at $1 and was it 55? Yeah, $1.55. Okay. Which is 58%. Okay. Now hold on. Now let's go ahead and we can assume once the price goes to $25, we have a margin of safety of 4. But now it's not. It's $1.55. So now let's do a simple Google search and let's type in, what is a good margin of safety? A good margin of safety, and this is just kind of like a generic Google. I wouldn't trust it, but just kind of just see what numbers we get. Generally, the majority of value investors will not invest in a security unless it has a MOS, margin of safety, to be around 20 to 30%. If the hurdle is set to 20, the investor will only purchase a security if the share price is 20% below the intrinsic value. But here's the thing, guys. They said below intrinsic value. Here's intrinsic value. What is the intrinsic value? $25. Guys, we're doing a margin of safety from the freaking book value. You know what I'm saying? We're doing it from the book value. You know how trash that book value is? It's low. And it's still, we are at so low prices on the price of the stock that it's $58. Now, normally, what you can do is you can take the intrinsic value price, which is here, and divide it by the current price of the stock, right? Right. So we take this, just like how we took the book value, which is the top number, we could take this top number and divide it by this. So we could do that. We could do equals. The book value here will just replace that with the, the book value will be on top, divided by the price of the stock. And then we get it here, R13. Oh, sorry. That's the same number. The point is, what I'm trying to say is that we take the price of the stock and then we take the IVC price, and you can see how low it is from the intrinsic value. And the larger, I mean, you don't really have to calculate the percentage here. The larger this is. So if this is, here's your margin of safety. We calculated the value of Clover to be $25. Okay. And then down here is the price of the stock right now. Okay. What is that calculation? Well, just like how we took the margin of safety here, which is the book value, which is the calculated price over the price of the stock, you can take the IVC price, which is $25, divided by the price of the stock. And you can see here that this is a tremendous, we're talking 16-fold undervalued here. 16-fold. Okay. So now let's take a step back. That was a lot of math. So forget the IVC price for right now. All we did was we took the total shareholders' equity, which we calculated from the balance sheet, divided by the shares outstanding, which we got from the shares that they have on file here. And we calculated the book value by taking the total shareholders' equity, which is the total assets minus total liabilities, and divided by the shares outstanding, which gave you 89 cents. Now, if all this math is hard and you're like, dude, I did not know what I got myself into. Like, stock market, like, oh my God, dude, I was just here for the short squeeze. You know, what the hell's going on, right? No worries. If you go here to our brain machine, and we'll go ahead and increase the zoom in here so you can see, because, you know, I want to make sure you see this. We calculated for you, and we do all the math for you, and we do so much math, okay? So all we do is we do help. We activate help, right? And then we type in or just click stock fundamental analysis, okay? And once we click stock fundamental analysis, you go down here to either annual key metrics or company TTM key metrics. What does TTM stand for? 12 trailing, or what I like to call it 12 trailing months, but let's just call it here stock Well, trailing 12 months. There it is. Trailing 12 months. That's what it means. Okay. Just wanted to show you because I don't know if you have photographic. You need to see it to believe it. All right. So you click this and then you type in CLOV and it goes to our data centers. And then it does it automatically just like that. But it doesn't give you just that. It gives you working capital, tangible asset value. It gives you all this. And we will be teaching all this. Don't worry. But you go all the way up here and you go to book value per share. And what does the book value tell you here for Clover? That it did automatically 89 cents. And what did we get here? We got 89 cents. So this was the long way of doing it because I like to teach you the long way. I want you to learn and be masters of the stock market, hence the name of our course. And our data side, I also want to give it to you because once you understand where to get it from, then you can, just do it on replay, right? You don't have to do it long term, right? But just in case if the numbers don't look right, then you can recalculate it yourself, right? So it gives you gives you the freedom to do both, and then it gives you enterprise. Someone said enterprise here. Here's the enterprise value. So we do all that, right? Good. So now that we talked about book value for Clover, what is the book value of Apple? Really valuable company. Okay, let's do it here. Help. Stock. TTM, which you could just type there. AAPL. We do Apple. And we get Apple. Right? You get by the way, we calculate a fair price value here too. We'll talk about what a fair price value is. $49. But assuming if Apple goes bankrupt, and if we want to sell Apple to the shareholders, you go to their book value. Oh wait, that's why I was like, wait a minute, that wasn't supposed to be there. This is a different. These are different ratios. We'll be teaching you this. These are ratios, guys. We want the key. I pressed the wrong button. Again, there's a lot of equations in here. Here, let me see if I can show you the room. These are all the equations Brain Machine can give you, okay? These are all the equations Brain Machine can literally do for you, okay? You see how much power you have at your fingertips? The power of Brain Machine. But let's go back here and let's go to the key. And let's type in Apple. Okay. So if you go to the book value for Apple, the book value is $3.16. What? $3.16? Are you kidding me? Well, yeah, of course. Right? That's the book value. So what I'm telling you is imagine if Apple fell at $5 or whatever, or $4. Guys, Clover Health is undervalued. Usually technology companies have a very low book value per share. Now, if you want to look at ExxonMobil, oh, no, that's Zome. I don't know what Zome is. Okay, I don't know what Zome is. Don't look at Zome. XOM, not ZOM. I hit the key. If you look at this price, it's $41 for its book value, right? Because it's a utility stock. $41. Okay. So when it was trading near the pandemic, when oil was $0, remember when oil, here, let's do some education here. Okay. Let's go to XOM. And let's, no, not XOM. Let's go to crude oil. Let's go to crude oil. And let's go to Max. And let's go to the pandemic here. Let's see if we can. Yeah, let's do full screen. Let's do full screen here. So we'll do Max. And we will go do 2020. And we will zoom in here. And we will see the price of oil. Let's change the lines to this guy. And it'll tell us, hopefully, how low it went in the net. Crude oil went in the negative, okay? So let's go to where ExxonMobil hit lows, and it hit lows around $32, $36, $32. And if you were to calculate the book value back then, because it's been like, 2 years, it's been like, 2 years. And by the way, we called ExxonMobil as a buy back in November. So congratulations on your 82% gain and still climbing. That's amazing. If you decided to hold, I personally sold because I was like, Russia can just stop their war anytime. If we were to go back now to the book value of XOM, XOM, ExxonMobil, it's $41. See that? You see how powerful that is? And if we go back to where 2 years ago, it probably was around in the low to mid 30s. So now, just for fun, I wanted to go over the ratios. Remember, we calculate the fair price. Let's do that for Clover to see what we get there out of curiosity. We'll talk about those calculations. So here's the price fair value for Clover. See this? And we'll talk about what does fair value mean and how to calculate that. So it's a different video. I don't want to put a lot in one video here, okay? $1.73. Okay? $1.73. Okay? So obviously it's trading below its fair value, and it's very close to its book value. Okay? So now let's go here and let's bring it over here. There it is. So as you can see, there's a lot that I haven't shared with you guys and talked to you about because I'm building these. Now we're close to completion, and beta access is about ready to be lifted very shortly. We just need to build out now the video side to things, and we're near completion from the Mastering Stock Market course. There is, which will be the lowest the course will ever be. There'll be a link down below, coupon code. It's an early Black Friday coupon code. It's Black Friday, which is the coupon. And it is going to be the lowest price that we'll ever have. You'll have lifetime access to all of our data, all of our calculations. So you're not going blind in the market. Okay. And access to our allstocktrades.com website and everything we have there. Okay. Love you too. Love you too. So on. So for on, if you're part of our group, comment down below in the the poll, and then we will go ahead and take a look at it. I speculate that I believe tomorrow I'm going to put an announcement out in the bi-monthly meeting, and I'm going to go ahead. We'll do like a quick hour, and then we'll go ahead and split that off for our bi-monthly meeting get together, so we can go ahead and work in the stock all together. And then what is this here? So we'll go in and talk about this stock then. So we just want to keep it Clover related right now. Okay, good. So that's all I have for you guys. I hope this was a very helpful video. For the earnings, I'm going to also create a link on Sunday or something. I have to go to the hospital, but what I'm going to do is I'm going to take some time to actually host the earnings. So I'm going to go ahead. I just need to talk on Sunday to see. I'll give you the final get-go on Reddit, Clove, and all of our group here that we'll be hosting it. It's easier and it's nice because you have a chat group, this side or that side, whatever side you see it on. That way, I think. So you guys can talk amongst your peers and make fun of the analysts too, which is kind of fun too. All right, guys. Absolutely. We'll definitely do that. We can list. Somebody in our group, let's go ahead and just make a list of Clove competitors, and we'll go by them one by one, and just go for each one and stack them up with the quantitative analysis, qualitative analysis, and the fundamental analysis and technical analysis. Okay. All right, guys. Love each and every one of you guys, and expect more to learn from our business here. Okay. So love you guys. Peace out.